The stock market is crashing right now. Red everywhere, panic selling, fear through the roof. But here's the thing, this is where the smart money makes moves. While most people are selling, I'm buying because history shows every crash creates millionaires. So in today's video, I'll show you 3 high quality companies I'm buying during this market drop, stocks built to bounce back stronger when the recovery hits. Let's get into it. Before we continue, I have to go ahead and show you why the market is dropping. Between sticky inflation, slower GDP growth, and fear of an earnings slowdown, Wall Street's freaking out. But remember, this is every crash from 2000 to 2008 to 2020 was followed by a major rebound. Smart investors prepare now, not when the CNBC says the recovery is here. So let's talk about 3 fresh opportunities that are set to thrive once the panic fades. First up, we have Amazon. Amazon stock has pulled back hard with the rest of the market, but underneath the noise, this company is a monster. E-commerce is still growing, Prime membership renewals remain sky high, and AWS, Amazon's cloud business, continues to print billions in profit. On top of that, Amazon is quietly building an AI empire through AWS infrastructure and its Alexa ecosystem. The company cut costs, boosted margins, and is sitting on a serious long-term tailwinds. When the economy rebounds, Amazon is one of the first stocks to take off, just like it did after every previous turndown. And me, I am personally invested in Amazon. I have about 11.2 shares. It's 18% of my portfolio, and my average cost is 215 bucks, which I am going to be buying more of Amazon since it is by my average cost, so I'm going to be purchasing more. Hopefully it goes lower. My return totally is $6. This was sitting at like 200 to 300 bucks at one point, but it went down, so therefore we're going to continue to buy. I have almost $2,500 in this one, and I'd like to see about 15 shares of Amazon, 15 to 20 by the end of the year in my portfolio. And one more thing, if you look at the history, every time Amazon has dropped 30% or more, it's ended up doubling over the next decade. The stock's trading at a PE ratio of about, let's go and check, 33, and which is actually cheap given its growth potential and dominance. This is a long-term compounding machine hiding inside a short-term sell-off, just like the other stock I'm going to introduce to you guys. And that stock would be Nvidia. Nvidia is a very reliable stock for many reasons, for which I'm going to go ahead and tell you. Nvidia isn't just a chip maker anymore. It's becoming a platform. Through CUDA, their proprietary software ecosystem, Nvidia has locked developers into their architecture. It's like Apple's iOS, but for machine learning. That creates long-term customer stickiness and reoccurring demand. Their margins, they're unreal. They're sitting at about over 75% gross margins last quarter. That's a higher than any semiconductor competitor by a mile. And when the economy slows, yes, Nvidia gets volatile. But when the recovery starts, Nvidia leads. After the 2022 correction, Nvidia was one of the first to triple off last lows. So while others are selling in fear, I see this as the perfect setup to accumulate. Whether AI adoption slows for a quarter or two, it doesn't matter. This company is at the top center of a 10-year megatrend. Long-term investors will thank themselves later for buying into quality innovation when prices were temporarily down. And as you can see, Nvidia is quite down right now. If we go look at the statistics, we can see its 52-week high was 195 and its 52-week low was $86. So hopefully it can go more towards this 52-week low. Then possibly I'll open up a position in Nvidia. The dividend yield is not too high, but I'm not really worried about that. The price to earnings ratio is fair. It's not too low. It's not too high. And I really like the way this company looks. Their margins are great. Their quality of their product is great. And if we go down here, we can see that there's an 89% buy statistic, 9% hold, 1% sell. People would be dumb to sell Nvidia right now, especially with these growing earnings per quarter. I personally am not invested in Nvidia, but I was previously about last year, but I ended up selling at 3.4 shares for 450 bucks pretty much because I didn't see the growth in the company and I messed up and missed the train. So hopefully you guys can take my advice so you don't make the same mistake I did. And the last one, Costco, the definition of consistency in chaos. When markets crash and consumer sentiment drops, most retailers bleed. Costco, it thrives. And why, you might ask? Because it's built on the value and loyalty. Costco doesn't rely on flashy marketing. It relies on everyday people wanting quality at fair prices. On top of that, the company has virtually no debt issues and over $13 billion in cash reserves. During the 2008 crash, Costco dropped around 25%, then tripled over the next decade, while paying out growing dividends and even massive special dividends. So while everyone's scared of a slowdown, Costco quietly prints money. It's the perfect balance to riskier growth stocks like Nvidia and Amazon. For investors who want peace of mind and performance, Costco is definitely the play for you. And before I let you guys go, I wanted to let you know that you have to have a long-term mindset. Crashes are emotional, but emotion is what destroys portfolios. If you stay logical and focused on quality, you'll end up owning the assets that everyone else wishes they bought when these things look scary. Amazon gives you the growth engine, Nvidia gives you exposure to innovation, Costco gives you safety and steady cash flow. That's how you build a portfolio that not only survives turndowns, it dominates the rebound. So there you have it. Those are three stocks I'm buying during this crash: Amazon, Nvidia, and Costco. Don't panic when the market dips. Plan. If you got value from this video, smash that like button, subscribe to Sky Capital, and drop a comment with what you're buying during this dip. I'll reply to a few of them. Remember, the market punishes emotion and rewards patience. Stay focused, stay invested, and keep building. Peace.